Hey, what's up, everyone? It is May 31st, last day of the month, and we're going to go over the markets and also talk about some new trades I'm currently utilizing. Still can look at the 15-minute box for the day. That one still is valid, but these new ones I think have a lot, or they do have a lot more potential for it, because like the box trades and the 50% retracement trades, those are good in a rangy market, but there's been times when the price will just blow through it and you have to wait a long time for it to come back against it. So what these new trade steps do is they get you out of the middle of the congestion, especially when the price blows through it and you're taking it at the extreme ranges for it, and that's typically where you'll see a lot of the turnarounds, since these are reversal trades in nature for it. So we'll start with the views and I'll just go over it, what it looks like. So starting off today right here, what we'll do, I'm going to just delete all this stuff to make it easier to see right here. So starting off today, there's still another over an hour left for the full trading session, but as you can see right here, going down to here, we have it's gone down into the extension range area and looks to be supporting it for the day. So this is probably going to be the area where the price is going to slow down for the S&P 500 right here for the day. You see here on the opening candle right here, the opening 15-minute, let me change the color to it. We had a breakdown, and it's showing that it's going to be go at least a little bit further down, which it obviously did, taking that to that. There's the target, hit that very easily. And then for the 50% retracement trade from it, we go from the high of the day right there, and we can see that right here, price is hit 50% and down to 38% to complete that one right there. So that is the S&P 500. You see 15 minutes getting oversold on this one, so it could be a little more sell-off in the day. What's this news? Oh, okay. Look at 4-hour MFI on the S&P 500 completely oversold right here. So we are expecting a pop up. As we see from yesterday on this 4-hour candle, huge wick on it right there, almost like a hammer. And so it could be with that candle right there formation. Now, I don't look too much into them, but when it correlates with it being in a completely oversold territory, look for a pop up here in the S&P 500. And then going here on the daily chart, it's middle of nowhere for MFI, so nothing going on right there. But basically how these kind of new trades that I'm using, how they work is, what I'll do is, let me go to extensions. That's what it is, yeah. So it just takes out all the middle stuff in there because we don't use that. We use the extensions, not the Fibonacci retracements there in the middle. So when the price goes up there, all we're looking for is price to reverse off one of these levels. And then when it does, we are looking to take that trade going back down here the other way. So you can see from like this one right here, the movement is going to be off the negative 1.618, which is actually the 2.618 Fibonacci extension level. So if price continues to move on down here and hits the 2.618 level down there, that would be the initial setup. That would be the initial entry to get in, and we're looking for the exit to be at the 200% level right there. The only way that moves is if price continues to move down, hits the 4.236, then we move the exit to where the entry was at 2.618. So for this trading style, you just have to make sure, or I have to make sure, since I'm the one doing it, that I have enough in money in my account to handle overnight margin requirements for it, because I do often trade overnight. So I guess I'm more of a swing trader than a intraday trader. But if it takes it out during the same day, awesome. We had one, the SP 500, that did that earlier today. I'll show you here in a little bit. But just have to make sure you have enough in there. And so then your second entry would be right here. And then the exit would be right here at the 2.618. So that'd be the second. And then to go from right there. So that's basically the gist of it, of how it works for it. We still have the, as you can see from right here, we still have also this trade set up where when price just busts through the 1.146 and the 1.414, we look for price to come back to it. That could be the first entry. This is the second entry. For the first entry, the exit is the 23.6 extension level, which is that purple line. When it hits there, you can see it never came back up and hit it. There, hit the right there, but never came up the purple line. So when price hits the 1.146, the exit moves back up to here. And that is the trade I took earlier today here for the S&P 500 for it. So from this move right here, we're looking for price to, if price does go all the way down to the 2.618, that's why I have that box drawn right there. And in fact, I'll change that to a long because there'll be a long target. That is the initial one that we are looking for right there for that. So let me just show you another way it works is we had using that symbol for that one, and I always go backwards for it. So I'll go bottom and then upper left, and if I'm going the other way, I'll go to the top to bottom left for it to drop that way. So what we had right here is price bounced off have the reversal off of the 200% line right here. And so then we go down here and look for the opposite way. And here's the opposite way down here, the 200% right there. Just draw that box right there, going long. So if I'd seen that trade, would have gotten in right there at the 200%. The exit is the next Fibonacci level, which is the 1.44. So it's a nice little, about 5.5. I probably gotten out definitely earlier, probably somewhere around there. So 4.5 point gain right there. But that is how that works for it. So going over into the Russell 2000. We had one come close to it today. Price came really, really close. Didn't quite hit it yet. May consider to be done. I mean, it's close enough. I've started it where if it gets close enough to it, and then you get that big move off of right there, making sure that done. But we'll just watch it. We'll see, because as you can see from using that right there and that semaphore, price reversed off the 1.414 level, and so we're looking for price to come down to the 1.414 level, and that'd be the entry. So actually, I'm going to get in down there if price makes another move down there. It hits it, and then the exit would be the 1.146, and then, but if price continues to going down, it's the 200 level, then we move the exit up to the 1.414 for it. And let me show you some more examples over here with it from what it looks like, how it works. And that and that. Here we had off the 1.414, that's the highest level it hit. So then going down here, we look for the 1.414. See it came down, hit the 1.414, and the next candle it hit the 1.146 to make that trade a winner for it. And I think those would be some of the good ones right there. This one probably isn't going to get hit today because what we had for this one, as you can see, price came off and hit off the 3.236 area, so that would be the level that we're looking for down here. Right now, price has only gone to the 200% level, so there still is this one that we're looking for down here would be the next one. So as you can see, there's a lot of support zones building up down here, and price has popped on up when it was hitting that one. It hit off the 200% level. Going over to the 4-hour chart. It's getting close to being oversold down here. Not quite there yet. And then daily chart, middle of no man's land, so that's no help. Going to ye old Dow Jones. The one we're looking for right now is this trade. So you see how it bounced off the 1.414 from that and that move. So we're looking forward to short it when it gets up here to that 1.414 level for it right there. For the movement for today, it's probably done for the day, because as you can see, price hit right in between the 1.146 to the 1.14, and that was the support zone for the day. That's how that works, and it just works like that a lot. It hits in between that 1.146 and 1.44. A lot of times that's where you see the reversal happen to it, and that happened the previous day. Then this day right here, it blew past it, and it happens occasionally, but most of the time you'll see price reverse off it, or at least stop to where the momentum is not continuing that same direction for the day. But the price went up, continued to move up, and hit off the 200. So if price does continue to move down, we'd look at the 200 line down here, be the first entry for that move. But what this also did create right here, which unfortunately I did not see yesterday, was it created this trade setup right here, where when it comes back to the 1.44, you get in initially if you get on the first one right there, and the exit is the 23.6 level right there. But price keeps on going down. It hits the 1.146. You move the exit up to the 1.414. Crude oil has had a massive beating this week. It's down over I think almost 4% yesterday. Today, now it's close to down about 2%. Messed up a trade down here. Got it right there. Got it right there. So messed it up, and I'll show you exactly what happened there. Which one was it off of here? Why did I take that? Where was it? It was... That wouldn't be it. That wouldn't be it. Is this it? This may have been it over here. I don't remember exactly which one it was that I was. No, it definitely wasn't this one. That's going to put too low. Then you see that one bounced off all the way to 4.236. So with the 4.236 down there would be the next one we're looking at. Golly, which one was it? Wouldn't be that one. Wouldn't be that one. Could be this one, but I don't think so. But anyways, what had happened was I had ended up getting in. It could be this one. Off the 200 there. It went back up and breached it. So not when it, anyways, what had happened was I had gotten in when was around, so that would be it about right there. So where is this it? This may be it. There we go. Yeah, okay, this was a trade right here I messed up. It's based off of this move right here. So we can see that the price used the 200 as kind of stopping point. And so what I should have been looking at was the 200 for getting in down here. But I got in down over around here at the 1.44 and was going to take it up. But anyways, it was just totally messed up. I mean, in fact, that isn't exactly it. But what ended up happening is price got in here, never hit the top of this down here, down there, and then came down and hit the 200% right there, and then went back up and hit the 1.44. So that's where I should have gotten out right there, but I did not. And then once I realized that, it was all the way down here and got out. So should have gotten in a second contract right there and got out right there, but instead didn't do either of those things and messed up that trade. So it happens sometimes. Sorry, I can't find exactly which one it was for it. So anyways, but messed it up. Anyways, so then for where's the price reverse? Yeah, okay. The Nasdaq right here had been completely overbought for a while. You can see last week the 4-hour chart was completely overbought. We finally had a little bit of movement down, and daily chart is just getting over there as well. So we've had finally a little bit of a downturn down. Still looking for more downside because this is a reversal extension trade as well. When price came down here and hit the 2.618 level. So from up here, the first entry would have been 2.618 with the target down there to the 200, but price continued to go up, hit the 4.236 level, and then has come crashing back down. So the exit we're looking for is around here at 14,225-ish, right around there. So still looking for a little bit more downside. And then I had taken it off of here, but I realized on the semaphore trades, the actual exit on semaphore trades is 30% line and not the 50% line. So that messed me up as well. So lots of things I had to go back and fix from, yeah, see right here. This is it right here. And that's what I put there is exit. So we trade the 38 50% because using the semaphore trade, and we can just go down here and we'll do the extensions. And then what we'll do right here is we will put on the retracement. Where is it? Pull back. There we go. So the exit is actually the 38% line, and there you can see right there it got hit. See right there. So I mistakenly assumed it was the 50%, which really 38%. So that would ended right there. So I kept on looking for price to reverse from it and come down back to the 38, and it didn't. And actually, this whole movement has been going up on the 38%. See right there. In fact, we'll take this one. So I'll show you the targets. It's been using the 38% line as the springboard, bouncing off. There it goes, hit that. There, hit the target right there, 1.146. Comes back down again. There, look at that, right off the 30% line. There we go, hits the target right in there. Go down here, look at this, right again on the 30% line. Goes there, hits the target right there. And now we are just waiting for the 38 in there. Okay, well, there it goes again. Came down here again, hit the 38% line. Went back up, hit the target level right there. And now it just completely took off. It's not even utilizing the 30% line. So if the trend continues and continues the 30% line, you know, look for the retracement, come all the way down here, 13,628, and then the target would be from that move at 14,931 if that continues. But as you can see, that had been kind of the launching pad for it for Nasdaq. But for the near term, we expect the market to come down here and hit that one right there. We're going to Bitcoin going up to the daily, and that's what I was trying to figure it out. We'll go ahead and delete that stuff. Yeah, see, that's why I was figuring it out, because notice price reversed a lot. So when it reversed a lot down to 1.14, there it goes, 1.14, came down here and hit it right there. So that was for Bitcoin. So still valid for the 5-wave Elliott move. I think I hid something off of here. Yeah, there it goes. Yep, I did hide it. Okay, cool. So still looking for Bitcoin, 5-wave move up here all the way 78,815. Using this daily chart, using that semaphore and that semaphore. If price does reverse back, we'll say the 200, that's pretty close to it. The 200 area is where we look for reversal and move back up. But if it does go all the way down there, that would void into the second wave of the Elliott potential Elliott move, and that would invalidate it for Bitcoin right there. So that's the wrap up today. Thanks.